Well, high prices continue to squeeze prospective home buyers. A new report from Realtor.com shows the lack of affordability as the #1 reason buyers are staying on the sidelines. Other reasons include affordable home availability. We're talking about inventory. They're saving for a down payment and getting approved for a mortgage. We're going to get some updates on the housing market next week with housing starts, builder confidence, and existing home sales data coming out. Joining us now is chief economist for Realtor.com, Danielle Hale. Danielle, it feels like there's not a lot of relief in sight every time we talk to you, but where do things stand right now? I mean, we're talking about the first-time home buyer really being squeezed. Those rates are near 8% now.
Yeah, home buying costs are very, very high right now. They've essentially doubled in the last 3 years. So it is a challenging time to be a home buyer, especially if you're a first-time home buyer and don't have the benefit of seeing your prior home go up in price and build up some equity that you can leverage in a transaction. So first-time home buyers are challenged by the market. At the same time, existing homeowners are challenged by the market because they are sitting on very low mortgage rates, in many cases under 4% or even under 3% in some cases, and market rates are up well above 7%. So trading up for those homeowners is an expensive proposition. And so the market is seeing not a lot of activity right now. Existing home sales continue to be quite low. And there's not a lot for sale because that mortgage rate lock-in effect is really hampering homeowners, keeping them on the sidelines. That's creating some opportunities for builders, but all in all, housing market activity on the whole remains quite low.
What type of overflow is that continuing to have within rents right now?
Yeah, so interestingly, I talked about, builders doing a little bit better than the existing home sales market. So we are seeing some people who might have bought existing homes look at the new market just because they're not finding what they want. At the same time, builders are building a lot of multifamily homes. Those are typically marketed for rent. So a lot of multifamily supply is coming on the way, and it's hitting the market at an interesting time. Our recent rental data has shown that rents have declined on a year-over-year basis for the past 3 months. We've got new rental data coming out next week. So, we'll look to see if that trend continues. That's spelling relief for renters, but it's also indicating some more competition for landlords is on the way as more supply is coming online when rents are already softening.
Danielle, going back to home buying, what's the rate you think at which it makes sense for a homeowner to say, okay, maybe I'll consider testing the market? We're not getting back to 3% anytime soon.
Yeah, no. So I think trying to beat their existing mortgage for many homeowners is just not going to be possible. You're not going to get a lower rate anytime soon. So it's going to be a different consideration for every single household. And they're going to have to think about their personal situation, how good of a fit their current home is, or how much more they need that additional space. If you've got a job change, you might have to move anyway. If you've got more kids on the way, you might have to move anyway. So there are family situations that are going to drive housing changes. I think the other thing people want to look at is their equity position. Do they have enough equity to roll into a new home so that maybe the sting of a higher mortgage rate is less impactful because they can put down a lot of equity and take on a very small mortgage? Or in some cases, homeowners who have 100% equity don't need a mortgage at all. They can be freed up to take advantage of a market that is much less competitive than it has been over the past couple of years.
If we do indeed see an inkling of a rate cut next year, or at least, some tenor or shift in the Fed that they're considering multiple cuts even, what would that do for the housing market? And would that mean that the prospect is largely changed for a lot of people? We see an overflow of new buyers and potentially sellers as well.
So I do think there is some pent-up demand in the housing market. High rates are keeping a lot of people on the sidelines for affordability, or for holding on to their existing low rate. I don't think we're going to see rates dip low enough to see a flood of homes onto the market. But I think as rates gradually drift lower, those individual calculations of should I move now or should I stay put will make sense for more and more people, because as it takes time for those rates to drift lower, those current homeowners are building up more equity in their houses and are having more life changes that are likely to drive the need to move into a different housing situation. So I think we're going to see a gradual recovery in the housing market as those rates drift lower. And the point at which people acclimate the longer it takes, the more they're going to get used to those higher rates. But I think for buyers in the market today, it's worth thinking about the fact that you can't control mortgage rates. And if you've been shopping over the past year, that's a very real reality to you. But there is something that buyers should know that they can take advantage of. And that's we have these seasonal patterns in the housing market of supply and demand and ebbs and flows. And they kind of are looking to shape up so that the first week of October 1st through 7th, is actually the best time of the year from a seasonal perspective for buyers to buy.